All right, so let's unpack this. We're talking about Sui, right? This high-performance Layer 1 blockchain. And there's this prediction, pretty audacious really, floating around. Could it actually hit $20?
Yeah, $20. It's a big number.
It really is. Is that just, speculative fantasy, kind of bull market euphoria talking? Or is there something more here? Like, is it a plausible, maybe even inevitable path for a serious L1 contender?
That's the question, isn't it? And is what we really need to dig into.
Exactly. So our mission for this deep dive is basically to unpack the roadmap or the potential roadmap behind that ambitious $20 target for Sui.
Right.
We're going to sift through a whole stack of sources. We've got these really detailed, data-heavy reports from Masari, from Binance Research.
Stuff there.
Then there's the, raw on-chain analytics from Defilama, which is always revealing, and some insightful articles from places like Cointelegraph.
So a good mix of technical and market perspectives.
Totally. And the goal, really, for you listening is to pull out the important nuggets, give you a shortcut to being, well, properly informed about Sui's potential.
And the challenges, too. Can't forget those.
Absolutely. The potential, the significant challenges it faces, and, what hitting that $20 mark would actually mean for the whole crypto landscape.
And it's super critical we frame this right from the start. Sui isn't just like another coin popping up. It's positioned itself as a pretty significant player in what people call the Layer 1 wars.
Yeah, that ongoing battle.
Exactly. That really intense high-stakes competition, between the base layer blockchains, Ethereum, Solana, Avalanche, all of them fighting to be the foundation, the bedrock for the decentralized economy.
Right, the infrastructure layer.
Precisely.
Yeah.
So a price prediction like $20, a potential 20x jump, that carries incredibly high stakes. It really demands that we approach this with serious critical analysis.
No hype, just the facts.
Well, informed possibilities, let's say. We need to dissect the tech, sure, but also the market dynamics, the potential catalysts. What could realistically drive that kind of growth? It's not just throwing darts at a board.
Okay, so before we get lost in future projections, let's just ground ourselves. Where is Sui right now?
Good starting point.
As we're talking, the Sui token, SUI, it's hovering around, what, $1, give or take?
Yeah, roughly $1, fluctuating a bit, obviously, with the market.
And at that price, it's fully diluted market cap, so all tokens circulating and planned.
The whole potential supply.
That sits somewhere between, say, $2 and $3 billion currently.
Right, which, compared to the giants like Bitcoin or Ethereum, might sound kind of modest.
Yeah, seems small next to them.
But, and this is important, within the Layer 1 universe, that valuation actually puts Sui squarely in the top tier. It's definitely not some small underdog anymore. It's a recognized name, a force to be reckoned with.
Okay, so it's already established itself to some degree.
Absolutely. Now, when we start talking about that $20 target, you really got to grasp the sheer scale of that ambition.
Yeah, that jump is huge.
It's an incredible 20x price increase from where it is now. That's not just a little bump. This would rocket Sui's fully diluted market cap into the, well, staggering $40 to $60 billion range.
Wow. 40 to 60 billion.
Yeah. And just to put that into perspective for you listening, that kind of market cap range, that means Sui isn't just a contender anymore. It'll be right up there, maybe even surpassing major Ethereum competitors like Solana or Avalanche.
So joining the absolute top ranks.
Exactly. Cementing its arrival as a truly dominant top-tier L1. And that shift, it's way more than just a higher price on CoinGecko. It's a fundamental re-rating of its value, its perception in the market. It implies a huge shift in market confidence in its utility.
Okay, so that's the potential prize. But the big question for us, for you listening, is what needs to happen?
Yeah.
What kind of fundamental shifts, what groundbreaking developments, what level of performance would actually be needed for Sui to pull off that kind of monumental growth?
That's the million-dollar question, isn't it? Or maybe the $60 billion question here.
Yeah, exactly. Because a 20x move in this competitive space, it doesn't just happen by luck or, some fleeting Twitter hype. There has to be real substance.
There absolutely has to be. And that's where the critical factors come in, many of which link directly back to Sui's specific design.
Yeah.
You need, first off, undeniable, proven technological superiority.
Not just promises, but delivery.
Right. The network has to consistently outperform rivals in speed, efficiency, cost. But more than that, it needs to offer unique capabilities that others struggle with. For Sui, that means its object-centric model, its parallel execution. These things need to genuinely unlock new kinds of dApps or offer way better user experiences.
So a clear technical edge. What else?
Then you need strong, sustained adoption, real users, actively transacting. and a vibrant developer community consistently building cool stuff on the network day in, day out. That's crucial.
The ecosystem has to thrive.
Mhm. And maybe most importantly, you need significant market belief, a collective conviction from investors, institutions, the whole crypto community, that Sui isn't just a player, but a future leader offering unique value.
So, tech adoption and belief, the trifecta.
Pretty much. And that's why this deep dive is so important. We need to dissect the how behind the what, especially looking at what makes Sui different.
Okay, let's shift gears then. Why Sui? Why did it even jump into this crazy competitive L1 arena? It wasn't just to add another name to the list, right?
Definitely not. It was designed from the ground up with a very specific philosophy. Massive scalability and super fast transaction speeds, right out of box.
And the key to that, the sort of secret sauce, is this
Yeah.
parallel transaction execution thing.
Exactly.
Yeah.
That's the core technical innovation. Now, for those who know the space, most blockchains, especially older ones like Ethereum with the EVM, they process transactions sequentially, one after another, like a single line at the bank.
Yeah, gets clogged easily.
Right. Sui's design is different. It's smarter. It can identify transactions that don't depend on each other and execute them at the same time in parallel.
Ah, okay. So like opening up multiple checkout lanes instead of just one long queue.
That's a great analogy. It drastically reduces bottlenecks, allows for much higher throughput, avoids congestion.
Mm.
It's a fundamental shift aimed directly at the scaling problems we've seen plague so many other chains.
Which means potentially avoiding those crazy high gas fees and network slowdowns.
That's the goal. It's crucial for a good user experience, especially if you want mainstream adoption.
Makes sense. And the other big piece is the programming language, Move.
Right. And Move is interesting. It didn't just appear randomly. It actually originated from Facebook's DM project. Remember that?
Vaguely, yeah, the stablecoin thing that never quite launched.
That's the one. And Move is also used by Aptos, another major L1, which shares that lineage.
Okay, so why is Move significant for Sui? What makes it special?
It was meticulously designed specifically for writing secure smart contracts. The big emphasis is on asset safety.
Asset safety, meaning
It's built to prevent common bugs and exploits you see in other languages. Things like reentrancy attacks, where a malicious contract can trick another contract into sending funds multiple times. Move's structure makes that kind of thing much harder, if not impossible.
How does it do that?
It treats digital assets as resources. Think of them like physical objects. You can't just copy a resource, you can't accidentally delete it, and you definitely can't spend it twice. It enforces ownership and scarcity at the language level.
Okay, that sounds inherently safer.
It provides a much higher degree of security and predictable execution. That's a massive plus for developers building complex stuff that can be more confident in their code. And it's great for users too, right? More peace of mind about the safety of their funds, their NFTs, whatever assets they hold.
So with this tech foundation parallel processing, secure language, what's Sui's big picture? What's the grand vision?
Well, it's not just aiming to handle simple token swaps. It wants to be the core infrastructure, the backbone for the really demanding Web3 sectors.
Like what?
Think high-throughput DeFi, where speed and cost efficiency are everything. Think truly immersive Web3 gaming. You need instant responses, super low latency, and the ability to handle millions of in-game items smoothly.
Gaming definitely needs performance.
Absolutely. And dynamic NFTs, other large-scale decentralized applications, basically anything that needs a network that can handle millions of users and transactions without, grinding to a halt. It needs to scale seamlessly.
Gotcha. So it's built for the future demands of Web3.
Exactly. And if you connect that vision back to the problems it's trying to solve, well, many existing L1s, even the big ones, they struggle with congestion. They become bottlenecks when things get busy.
We've all experienced that. Network busy, try again later.
Right. Or gas fees go to the moon.
Hmm.
Sui's designed architecturally to sidestep those issues. It wants to provide that robust, reliable network needed for the next generation of Web3 apps, the ones that need industrial scale performance.
So it's not just a slight improvement, it's a different approach.
That's what's fascinating here. It's not just incrementally better. It's designed with a fundamentally different architecture, the object model, the parallel execution, specifically to tackle the scaling problems that plague current blockchains. It's a direct response to the limitations we've seen, kind of a reimagining of how a blockchain can work efficiently at a truly global scale.
Okay, so the tech sounds impressive. It's built for scale, built for security. But having a great engine isn't enough, right? You need fuel. What are the actual catalysts, the growth engines, that could realistically propel SUI towards that $20 target?
Great question. The tech is the foundation, but you need drivers on top of that. And the first, maybe the most fundamental, is developer ecosystem growth.
More builders coming to SUI.
Exactly. It's pretty straightforward logic. The more talented developers, the more innovative teams that choose to build their dApps, their DeFi protocols, their NFT projects, their games on SUI, the healthier and more valuable the network becomes.
Makes sense. More stuff to do on the chain.
And you can track this. Sources like Masari Research emphasize looking at metrics like the number of unique active developers. If that number is consistently growing quarter after quarter, it's a strong sign of genuine ecosystem health and future potential.
Right. It shows real activity, not just speculation.
And that creates this really powerful positive feedback loop. More developers build cool apps. Those cool apps attract more users looking for good Web3 experiences.
And users bring activity.
Exactly. More users mean more transactions, more smart contract calls, which increases the demand for the native SUI token you needed, for gas fees, for staking, maybe governance.
Utility demand.
Pure utility-driven demand. And that increased demand, that network activity, it attracts even more developers. It's a virtuous cycle that can seriously drive up the token's value. It's the core engine for any successful L1 aiming for mass adoption.
Okay, developer growth is key. What's another major driver?
Strategic partnerships and institutional backing. This can be absolutely massive. We've seen it transform other chains.
Like big names getting involved.
Yeah, imagine collaborations with major established players.
Yeah.
Maybe big Web2 companies, think gaming studios, maybe social media giants, especially given SUI's roots in Facebook's Deem project. Or even established Web3 players choosing SUI for key infrastructure.
That would be huge validation.
Huge. These aren't just logos on a website. They can onboard millions of new users who might never have touched crypto otherwise. They provide massive third-party validation for SUI's tech, its security, its long-term viability.
Signals legitimacy to the wider market.
Exactly. It tells enterprises, tells institutional investors, hey, this project is serious, it has real-world potential, and that often leads to significant capital inflows. Big money is way more likely to commit when they see validation like that.
Like what Polygon did with Starbucks and Reddit.
Precisely. Those kinds of deals brought mainstream users into Web3 on a massive scale. If SUI could pull off something similar, it changes the game entirely.
Okay, partnerships are huge. What about specific sectors? You mentioned gaming earlier.
Yeah, gaming and the metaverse. I mean, if you're looking for a potential killer app sector for a high-performance, low-latency chain like SUI, gaming has got to be right at the top of the list.
Makes sense. Gamers hate lag.
They despise it. And SUI's architecture is the speed, the low latency, especially its object model, which makes managing potentially millions of unique in-game items really efficient. It seems tailor-made for Web3 gaming. You need that seamless instant experience.
Yeah, if SUI becomes the place for big Web3 games.
The implications for token demand could be explosive. Think about it. SUI needed for gas, sure, but maybe for staking, to earn in-game rewards for buying and trading those unique NFT items directly within the game.
The whole in-game economy running on SUI.
Exactly. If millions of gamers are actively using SUI for their favorite games, the demand for SUI could skyrocket. It's a massive potential market that SUI is clearly targeting.
Okay, that's a big potential catalyst. What about just market access? Getting the token out there?
Right, the practical side. Liquidity and exchange listings. This is crucial for capital flow. You need wide availability on the major centralized exchanges, the CEXs, beyond just the initial launch listings.
So people can actually buy and sell it easily.
Exactly. And deep integration with decentralized exchanges, DEXs too. It increases accessibility for everyone, from the small retail investor to the big institutions wanting to deploy serious capital.
Why is liquidity so important for price appreciation?
Well, increased liquidity generally means it's easier for large amounts of money to enter or exit the market without causing wild price swings. If SUI is going to 20x, it needs to be able to absorb huge amounts of buy pressure.
Without the price just going vertical and then collapsing.
Precisely. Deep liquidity reduces that volatility, makes it a more stable, attractive investment, especially for those larger institutional players whose capital is really necessary for that kind of massive price move. It de-risks the trading aspect.
Got it. One more, market psychology, the narratives.
Ah, yes, narrative rotation, the often unpredictable but powerful force of market sentiment.
We see this every cycle, right?
Every single time. During altcoin bull runs, investors constantly rotate capital. They take profits from established large caps, maybe ETH or SOL, and look for the next big thing, the perceived undervalued or next-gen L1 like SUI. They're chasing those higher returns, the potential for parabolic growth.
Looking for the next 100x.
Exactly.
Yeah.
And it's a common pattern. If SUI can combine a compelling narrative like being the ultimate gaming chain or the most scalable L1 with its solid fundamentals, it could become a magnet for capital during these rotation phases.
But it needs the tech and the story.
Absolutely. If you connect this all together, these catalysts aren't isolated events. They're like a coordinated push from tech advancements, community growth, strategic deals, market sentiment, all potentially converging to create the conditions for a significant move upwards. It's a symphony, not just one instrument playing.
Okay, that all sounds promising. The tech, the potential catalysts. But let's be real. No deep dive is complete without looking at the flip side. The path to $20 for SUI, it's definitely not guaranteed. There are major hurdles, right?
Oh, absolutely. It would be irresponsible not to examine the risks thoroughly. And the first, maybe the most obvious one, is just intense competition.
The layer 1 space is brutal.
It's incredibly crowded, fiercely competitive, and changing constantly.
Yeah.
You've got the established giants, Ethereum still dominates, Solana has huge mind share and user base.
And then Aptos, the other move chain.
Right, Aptos, often seen as a direct peer or sibling. They're all fighting tooth and nail for the same prize.
What prize is that?
Developer retention, user adoption, market share, TVL. There are only so many top-tier developers, only so much investment capital to go around.
So they're all fishing in the same pond, basically.
Pretty much. Which means sustained differentiation is absolutely critical for SUI. It can't just be good. It needs to be uniquely compelling. It has to consistently outperform and out-innovate its rivals to really carve out a significant slice of the market and keep it. The market doesn't wait for anyone.
Fair enough. Competition is fierce. What else?
The big one that hangs over everything in crypto, regulatory headwinds.
The regulators. Always a factor.
Always. And Layer 1 ecosystems are right in the crosshairs. Think about evolving global regulations, how tokens get classified, are they securities? What are the compliance requirements in places like the US or the EU with MiCA? Even potential bans in certain countries.
Yeah, that could throw a huge wrench in the works.
It really could. Regulatory uncertainty is a massive risk factor. It can cause significant delays, stifle innovation because teams get scared, or impose really strict restrictions that suppress adoption and scare away institutional investors.
Imagine a major market clamping down hard.
Exactly. It could severely limit SUI's global reach and growth potential. Suddenly, that $10 target looks a lot further away, maybe even impossible in certain scenarios, and just the cost of compliance itself could be huge.
Okay, regulation is a big unknown. What about adoption, actually? Stalling.
That's another critical risk. Stalling adoption combined with token inflation. We've seen projects with great tech fail because they just couldn't get enough people using them.
Could build it and they will come fallacy.
Precisely. If SUI's developer ecosystem growth slows down, or if user adoption just doesn't take off like they hope, it creates a big problem. Why? Because new SUI tokens are constantly being issued.
For staking rewards, ecosystem grants, that kind of thing.
Right, token inflation. And if there isn't enough new demand to soak up that new supply, it puts downward pressure on the price. It can easily outweigh the existing demand.
So supply outstrips demand, price goes down.
It's that fundamental balance. Every new token dilutes the value of the existing ones unless there's real organic growth, new users, new dApps, real economic activity creating genuine demand to absorb it. Without that, you get an oversupply scenario and a $20 target becomes really, really tough, no matter how good the tech is. The market needs to see that utility.
Okay, that makes sense. And finally, this ties into it, the question of hype versus actual use.
Yeah, this is a big one. We have to ask, is SUI's potential grounded in genuine sustainable utility and real-world use cases? Or is it mostly riding on speculative hype, the kind that flares up in bull markets and then disappears?
The danger of being just the flavor of the month.
Exactly. Relying too heavily on those short-lived speculative cycles without building something truly sustainable, something that solves real problems for people, is incredibly dangerous.
Because the hype eventually fades.
Always.
Yeah.
Long-term value, long-term price appreciation, it requires tangible applications. Stuff that solves problems, attracts users who stick around, creates real economic value. Without that substance, the initial excitement will eventually evaporate.
So the crucial question then is,
how can SUI navigate all these risks? It's not enough just to have a good product or even a great one. The execution, the ability to adapt, the resilience to navigate regulatory storms or competitive threats.
yeah,
That's just as critical for hitting a target like $20.
Yeah.
It's about building something robust enough to survive the inevitable crypto winters and actually thrive in the summers.
Let's talk about that $20 target again, but from a different angle. Why is that number significant? It feels like more than just a price point.
It absolutely is. Hitting $20 wouldn't just be a number on a chart. It would be highly symbolic. It would signal, unequivocally, that Sui has emerged as a truly serious Ethereum killer contender.
Really challenging the big dogs.
Exactly. Forcing the entire market to recognize it, putting it right at the top of the layer 1 hierarchy, making people reconsider the established pecking order.
So it's about perception, about narrative.
It's hugely about mind share and narrative, not just market cap. Reaching $20 would solidify Sui's story as a viable, high-performance, scalable alternative for developers building the next big thing and for users wanting a smooth, cheap experience. It's basically a declaration. We belong in the top tier.
Okay, so symbolic leadership. What else does $20 signify?
It would also be a massive market-wide validation of Sui's core technical innovations.
You mean the parallel execution and the move language?
Precisely. A $20 valuation implies the market truly believes in those architectural choices. It's the market saying, yes, this approach, parallel processing, the safety features of MoveGuide, this is the next generation of smart contract solutions. We see genuine long-term value here.
So a vote of confidence in their specific tech strategy.
A powerful testament to it. It signals that these aren't just interesting ideas, they're potentially winning solutions to the problems that have held back earlier blockchains.
Makes sense. And what about the ripple effects? If Sui actually went on a 20x run, what would that do to the market dynamics?
Oh, the effects would cascade. First, you'd almost certainly see massive retail FOMO.
Fear of missing out kicks in hard.
Big time. A 20x surge draws in a whole new wave of individual investors who see the momentum and don't want to be left behind. Everyone's looking for the next Solana.
Yeah, that drives a lot of retail behavior.
But it's not just retail. A move like that would trigger significant, probably accelerated institutional research and investment.
The big money takes notice.
They'd be compelled to. Hedge funds, VCs, maybe even corporate treasuries. They'd have to seriously study Sui, understand its potential, and likely start allocating serious capital to what's now proven itself as a high-growth asset.
So institutional validation follows the price sometimes.
Often it does. That influx of sophisticated capital, alongside the retail interest, would further deepen liquidity, add legitimacy, and probably lead to a big increase in long-term staking as well. People locking up SUI for yield, further securing the network.
Right, stake can take supply off the market too.
Exactly. So what's really fascinating here is that $20 isn't just some arbitrary number, it's a psychological threshold.
Yeah.
Crossing it would fundamentally change how Sui is perceived by everyone, from the casual trader watching charts to the biggest institutional funds making billion-dollar allocation decisions. It changes the entire narrative.
To put this potential 20x move in context, it helps to look back, right? Crypto history has some wild stories. What parallels can we draw?
Absolutely. History doesn't repeat exactly, but it often rhymes, especially in crypto. A prime example is Solana's meteoric rise. Remember that?
Oh, yeah. Went from relative obscurity to over $250 at the peak.
Exactly. Just a few years ago, many saw it as just another L1 hopeful. But then, during that huge bull run, it exploded over 100x for early investors. And why? Primarily because it became the go-to place for NFTs and certain DeFi projects, offering much faster, cheaper transactions than Ethereum at the time.
It found its niche and executed.
Precisely. Solana's journey is a powerful demonstration of that potential for rapid exponential growth when an ecosystem finds product-market fit, delivers on its tech promises, and attracts serious capital and developer talent.
So the lesson for Sudi is,
Find your killer app sector, maybe his gaming, build that passionate community, deliver the performance, and the market can respond in a similar parabolic way. It shows it's possible.
okay, Solana is one example. What about others?
We've seen similar dynamics with chains like Avalanche and Year Protocol. Both had periods of dramatic growth when the key ingredients aligned.
What ingredients?
Capital inflows, strong developer activity, and really compelling narratives. Avalanche, for instance, gained huge traction with its subnet architecture, attracting specific niches like gaming and enterprise DeFi. Nearem pushed its developer-friendly environment and its sharding solution for scaling.
So they had unique selling points that resonated.
Right. These cases highlight that synergy we talked about. It's rarely just one thing. It's usually a harmonious combination. The money, the builders, the story, all clicking together to create that powerful network effect that propels an L1 forward. It shows the power of a well-aligned ecosystem strategy.
Interesting. Is there a different kind of catalyst we can look at, maybe less about pure tech and more about bridging to the real world?
Definitely. Look at Polygon's success with Web2 partnerships. That's a different but equally potent growth vector.
Right, they onboarded huge brands, Disney, Starbucks, Reddit.
Exactly. And that was massive. It effectively bridged the gap between mainstream companies and Web3, bringing potentially millions of their existing users into decentralized apps, often without them even realizing they were using blockchain.
Lowering the barrier to entry for normies.
Hugely. It established Polygon's legitimacy far beyond just the crypto-native crowd. So imagine if Sui could land similar high-profile deals, maybe leveraging its DM connections for enterprise Web3 solutions or partnering with a massive gaming publisher.
That $20 target starts looking less crazy.
It makes it seem much more achievable, right? Because you're not just fighting for the existing crypto users, you're massively expanding the potential user base. Yeah. It's about growing the whole pie.
Okay, one more parallel, Aptos, the other move chain, the sibling rival. How does that dynamic play in?
Yeah, the Aptos comparison. It's fascinating because they're so often mentioned together, given the shared tech roots and similar timing.
Does the competition hurt them both?
Or hell, yeah. Ironically, it can actually fuel hype for both. The market loves a good horse race, right? Investors are always looking for the next big thing, the Solana killer. When you have two strong contenders like Sui and Aptos, both built on innovative tech like Move, it creates this narrative of a head-to-head battle.
Which generates excitement and attention.
Exactly. It generates buzz, analyst comparisons, and, critically, investment flows into both projects as the market tries to figure out who the ultimate winner might be, or simply decides to bet on the leading contenders in that specific niche.
So the rising tide lifts both boats, to some extent.
It can, yeah. So if we step back and look at the bigger picture, these case studies, Solana, Avalanche, Near, Polygon, Aptos, they offer a kind of roadmap. They show that while the path to massive growth isn't guaranteed, the catalysts we've identified for Sui, ecosystem growth, partnerships, niche domination, narrative, have historically worked for other L1s. It offers both hope and, cautionary tale about needing solid execution. The past gives us valuable frameworks for analysis.
All right, for everyone listening who really likes to get into the weeds, the hard numbers, the data, let's talk about how you'd actually analyze Sui's potential using the kind of metrics available from our sources.
Yeah, let's get quantitative. Super important for informed decisions.
Imagine, conceptually, a price projection chart. Something that visually compares Sui's potential growth path, say milestones at $1, $5, $10, $20, against the historical charts of Solana or Avalanche during their big runs.
That kind of visualization is incredibly helpful. It helps you grasp the scale of the growth needed. Messari's Layer 1 reports often do this kind of thing. They might show, for instance, that for Sui to hit $20, its market cap needs to grow by a percentage similar to what Solana did, going from, say, $10 billion to $100 billion.
So it contextualizes the ambition against real history.
Exactly. It quantifies it. Is it a climb, a steep ascent, or a moonshot? Comparing it to past successes and failures helps you understand the magnitude of the challenge and the potential reward.
Okay, beyond price charts, what about the ecosystem's health? You mentioned developer activity metrics earlier.
Right, the pulse of the ecosystem. These are critical leading indicators. You want to track things like GitHub commits. Is code actually being written and updated frequently?
Shows active development.
Then, the number of dApp launches are new applications actually going live on the network, adding utility. And, of course, total value locked, TVL growth, especially in DeFi, is real money flowing into the ecosystem.
Where do you find this stuff?
Again, sources like Messari Research track this closely. Their reports might highlight, for example, that Sui saw a, let's say, 35% increase in active unique developers last quarter. Cointelegraph might pick up on that trend and call it crucial for escape velocity. This data shows if builders are genuinely attracted and sticking around.
Gotcha. So developer activity shows building is happening. What about actual users?
For that, you turn to on-chain data. This gives you the clearest picture of real user engagement and organic adoption, beyond just speculation.
Like what specific metrics?
You look at things like active wallet growth. Are new users joining the network? You look at monthly or daily active users, or people actually interacting with dApps regularly. And you dig deeper into that DeFi TVL, where is it concentrated? Is it sticky?
And Defilama is good for this.
Defilama is fantastic for real-time on-chain data. You can go there right now and see, perhaps, that Sui's TVL jumped 25% last month, maybe driven by specific lending protocols gaining traction. That suggests real users are finding value and deploying capital. It's tangible evidence of organic growth.
Okay, that makes sense. How do you compare Sui directly to its main rivals, like Solana and Aptos, on a technical level?
For that, you'd want a conceptual comparison matrix, something that lays out the key performance metrics side by side.
Like TPS, fees, adoption.
Exactly. Transactions per second, TPS, both theoretical maximum and realistic average. Average transaction fees, how cheap is it really to use? Overall adoption metrics, maybe active addresses or transaction counts. And developer traction, perhaps comparing dApp counts or GitHub activity directly.
Where would you find analysis like that?
Finance research often does excellent deep dives comparing these next-gen blockchains. A matrix from them might show Sui has a higher theoretical TPS than Solana due to parallel execution. But maybe Solana currently has more active daily users because its ecosystem is more mature. It might show Sui's fees are competitive with Aptos.
So it gives you that objective head-to-head view.
Precisely. It lets you see where Sui truly shines based on data and where it might still need to improve or catch up. Essential for any serious analysis.
And just to remind everyone listening, the sources we're drawing these ideas from are out there. Cointelegraph articles on Sui's ecosystem, those deep Masari Layer 1 reports, real-time data on DeFi, Binance Research's comparisons, even the Sui Foundation's own Medium posts or Aptos docs for move language details.
Cannot stress that enough. We're synthesizing here, but the raw materials are available. Doing your own research, digging into these primary and secondary sources, that's how you build real conviction. Or identify the red flags yourself. Empower yourself with the knowledge.
Okay, so we've covered a lot. We've gone deep into the tech, the potential upside, the catalysts, the very real risks. After hearing all this, processing it, what really stands out to you? What's the key takeaway clicking in your mind right now?
Yeah, time to synthesize.
Do you genuinely believe Sui has what it takes? Not just the cool tech, but the whole package, the execution, the community, the market timing, to actually challenge, maybe even dethrone a giant like Solana in the long run? Or does it feel more like another promising L1 that might just get lost in the noise, another project that overpromises and underdelivers?
It's a tough call, isn't it? Lots of potential, but lots of hurdles.
And think about this scenario. If Sui does make that incredible run, if it hits $20, maybe even overshoots it, what's your move? Are you taking those 20x profits off the table, locking in the win? Or are you a true believer holding on tight for an even bigger target, maybe $50, betting on its fundamental role in the future of Web3 infrastructure?
The age-old question.
Right.
When to take profits, or if.
And considering its strengths, that speed, the object model, do you think Web3 gaming will truly be Sui's killer app? Is that the sector that will drive mainstream adoption and justify that huge valuation? Or will its main success story end up being written in DeFi, despite the fierce competition there? Or maybe it's something else entirely, some niche we haven't even properly considered yet.
Where will the breakout success come from, if it comes?
Right. And ultimately, the big question. Could Sui be the dark horse of this next cycle? The unexpected breakout star that catches everyone by surprise and totally reshapes the L1 landscape? Or will it struggle against the headwinds, the competition, the regulatory fog, and end up as another footnote in crypto history? Another altcoin that had its moment but couldn't sustain it.
High stakes, fascinating possibilities. It really forces you to form your own thesis, doesn't it?
Yeah.
Hashtag tag outro.
Well, we have definitely covered a huge amount of ground today. We've really tried to meticulously explore Sui's ambitious $20 target, dug into the tech, looked at the catalyst, but also spent proper time on the risks. It's definitely complex.
It really is. No easy answers here. Achieving that kind of goal, that 20x, it requires such a rare mix. You need the tech superiority, which, Sui arguably has architecturally. But then you need the strong community adoption, the developer buy-in, those strategic partnerships opening doors. And you need the market conditions to be right. It all has to line up.
A very high-stakes game, but yeah, built on a really interesting foundation.
Definitely differentiated.
And, speaking of projects needing things to line up to gain traction, it's kind of fascinating how channels like this one, the ones bringing you these deep dives, or really any quality crypto content out there, they kind of thrive on similar ideas. Community engagement, support.
It's such a direct parallel to the decentralized world, isn't it?
Yeah.
Just like a blockchain project needs that vibrant, active community to validate its vision, drive adoption, secure the network. Well, content creators, us included, we rely on that exact same energy.
Yeah, absolutely.
That active engagement from you listening, maybe dropping a comment with your thoughts, sharing this if you found it useful, even just hitting the like or subscribe button, it plays a genuinely crucial role.
How so?
Well, that interaction, it helps boost visibility. The algorithms see that people are engaging, and they show the content to more people. It helps quality analysis reach a wider audience. Honestly, it fosters a sustainable ecosystem where creators feel motivated and supported to keep digging deep, keep researching, keep sharing valuable insights. Your participation literally helps fuel this.
So whether we're talking about a groundbreaking layer one like Sui trying to hit $20 or the platforms like this one that try to dissect its future, the core principle seems pretty consistent, doesn't it?
It really does.
The collective belief, the active participation of a community, whether it's users, developers, or viewers, that can truly shape what's possible in this whole digital frontier. So maybe a final thought for you to ponder. What role do you see yourself playing in fostering that growth, whether it's for a project you believe in or just for the knowledge-sharing ecosystem that helps us all navigate this space?
Something to think about. It's all interconnected.